you know what? We have Renae Goodwin today. And like I said, she really helped me a lot with my personal portfolio. And she can tell us firsthand if she agrees the insurance market's going a little bonkers. I had my personal story that you're familiar with. Rick Church emailed his in and said he was non-renewed for an apartment, a 16-plex or something in Arizona. And then when reshopping rates, it was the best his agent there could do was 2x what he was paying. So from like something like 3,500 to 7,500 or 8,000. So Renae, let us know, come up here, let us know how much do we need to brace ourselves? What do we need to do? Renae,
thank you all for being here, because even though
crap.
Stacy's, did it go away?
No, we're good.
Even though Stacy's invitation made it, well, as appealing as it could be, I know no one really wants to sit and talk about insurance, so I understand. Leslie got to sit through a similar presentation last week, and Tom as well. Yep, you were there too. This one's changed, so it's not going to be the same. You don't have to sit through the same thing, but we'll cover some of the same things just for good measure. And insurance is bonkers. I mean, it really is just, it's crazy. There's no other way to put that. It's just crazy. So I'm with Marsh McLennan Agency. I do personal insurance, so Stacy's personal, but also all of the rentals and everything that she has. So some of the small business and commercial that goes along with that. So I'm seeing that on both sides of the fence. Commercial hasn't been quite as bad, at least not here yet. I know the fellow he had this 16-plex in Arizona. We're seeing some of that here, but not as bad. It's property. Property coverage is crazy. So we're going to go through some maybe silly basics on insurance. What is insurance? Give me your definition of insurance, please.
That's a cost, fixed cost to cover unforeseen losses.
Good. Very good. Anybody have anything to add to that? That was pretty good. I mean, you want to switch? I'll sit and you talk, because that was good. So insurance it's a pool.
Yeah.
It's a big pool, and we all put money into it in the hopes that we don't have a loss. But when we do, there's this big pool of money that we've all been paying into, and that's what pays our losses. Insurance companies vary literally from soup to nuts on how they manage those funds to pay for losses, how they invest those funds. And of course, right now with the inflation, investments they're interesting as well. Everything's interesting right now, isn't it? Everything's just a little interesting. But their goal, of course, is to maximize their profit, because insurance companies aren't nonprofits. They're in a business just like the rest of us are. They need to make a profit as well. They have employees to pay. So they're not a nonprofit. So they're looking for ways to maximize their profit. And it's also, in case you didn't know this, insurance is highly regulated. So although that insurance company came back with more than double the premium this year, it wasn't the same insurance company. It was a different insurance company. The insurance company he was with said, we don't want you anymore because your rentals are old. We're just flat not going to do those anymore. So we're not having any part of that. And what we call that is pulling the bad risks out of the pool. Okay, so you've got a big pool with most of the people in it. Got a smaller pool of people that are the best swimmers. They're the ones that are, the newer homes, the well-kept, the less risk. And then you've got the companies who are kicking out all the bad swimmers because they're not pulling their weight. They're the ones that have more losses. They're the ones that have more issues. Maybe they're the ones that aren't keeping up with their good maintenance. It can be a myriad of things, but they're kicking out the bad swimmers because they don't want anything to do with that anymore. So what is property and casualty insurance? So you gave me a big overview of what insurance was. Anybody understand the difference? In the industry, we call it P&C. Property insurance is just that. It takes care of property. So that can be your homes, your cars, your cabins, your apartment complexes. It's just property. And it's for a certain list of perils: fire, theft, vandalism, explosion. Really interesting things like that, trees falling on your building. Casualty is the liability side. So that's the unknown. You know what the property is going to cost, what it would take to replace it or repair it. Casualty side's kind of an unknown because you never know what people are going to sue for. And these days, everybody's suing for a lot more than they used to. The more people move into Idaho from places that are a little more litigious, and I'm not pointing out any one state at all. But other places were much more into those things than Idaho has typically and historically been. So liability is you causing or your tenants possibly causing damage to another's property or injury. Make sense? So property and liability coverage, those are the things that you're looking to insure. Yes, ma'am.
Does your umbrella policy go under that one?
That's liability. That's the casualty side because it's liability only. It doesn't have anything to do with property coverage. Why do we need property and casualty insurance? That's kind of a no-brainer. It's a risk transfer. It takes your fourplex that's worth $800,000, gives that to an insurance company who says, we're going to charge you, well, once upon a time, that might have been $1,000 a year to insure that fourplex. Now it might be double that, but you're paying $2,500 a year, say at max, to insure $800,000 and hoping that nothing happens to it. And if it does, again, you're $2,500, $800,000, the insurance company owes you $800,000, the cost to rebuild that structure. So how many years, and I don't have a calculator, so one of y'all is going to have to figure this out. How many years would you have to pay $2,500 to cover the cost of that $800,000 structure?
24, 32 months. Wow.
Wow, is that right? Can you be that fast?
At 2,000?
Yeah, at 2,000, we'll say.
Well, 800,000 divided by 2,000 is 400.
So 400 years. You would have to save that that 2,000. Can that be right? A lot. So yeah, 2,000, a long time. Yeah, we can leave it at that.
800,000 divided by 2,000 is 400.
400. So 400 years, you'd have to save 400 years. That would be no big deal, right? 400 years, just save $2,000 a year. Yes. So I mean, that is what insurance does. It puts your money in that pool. The insurance company then has a contract with you that says, you keep paying this, whatever we want to charge you, and we'll take care of your property if something happens to it. Okay, that premium usually includes, again, property and casualty, the liability side. So it's all one package most of the time. Highly regulated. Insurance is highly regulated. The insurance commissioner in each state looks at every rate that every company who does work here charges. It has to be approved. If somebody wants to take a massive rate increase, they have to run it through the Department of Insurance before they can put that out to the public. There's also federal regulations that keep an eye on insurance too. So one of the most heavily regulated industries in the world is insurance. So when you think that insurance companies are being unfair, know that there are people watching out for you. And I'm not saying that just because I'm in insurance, I'm saying it because it's a fact. Because there are times where it seems highly unfair. Now I've been canceled by my current insurer because they don't like me anymore. They don't want my 16-plex in Arizona. And now the best I can do is more than double. Seems pretty unfair. But somebody somewhere is looking out for those things. Know that. It's very highly regulated. Self-insuring, I always throw self-insuring on there. Because you can self-insure. You could put that $2,000 away for 400 years so that you could pay for that if something happened. But better yet, you can actually share more of that risk with the insurance company. Take a higher deductible. Take a significantly higher deductible and put that money in the bank and save that premium to pay your deductible when there is a big loss. Take a $10,000 deductible if you can. That will take your premium down. So that's a mode of self-insurance or sharing the risk. What's happened to the pool for decades, especially in so how many of you have been here 10 or more years? Okay, most of you. So we have been
In Idaho?
in Idaho, we've been very, very fortunate to be 46th low in the nation for our insurance premiums. We don't know that because most of us haven't gone somewhere else and paid insurance. Some of us have, some of us have come in from other places.
Our insurance got cut in half the day we changed our address.
Right, exactly right.
Yeah,
Yep. Our premiums are still incredibly low compared to all our neighboring states. All of them are way higher than we are. The minute I have a client who says I'm moving to Washington or Nevada or Utah, I'm like, yes, there's some more premium because their premiums are so much higher than ours. Are ours going up? They absolutely are. I don't know that we'll catch up with our neighboring states, but they are definitely going up.
Why are ours lower?
But for the longest time, it's because our risk was so much lower. I mean, we don't have hurricanes. We do have flooding. We just don't have it as bad as Louisiana does. We don't have earthquakes, although we have had them. We don't have tornadoes. We don't have any of those major catastrophic things that so many other states have. So
Why
that's
are they going-
part of it.
So why are they going up then?
Because remember that big pool we were talking about?
For the fair share?
Mhm. Because all those insurance companies have their own big pool of money and they are paying out losses in other places. And they're paying out more here. The frequency, the number of times claims are happening, and the size of claims has increased tenfold in 1 year. So it's huge. People are turning in a lot more claims when the economy's bad. And your water heater goes out and you don't have the money in savings to take care of that water heater. Suddenly you didn't notice that there was water and you let that go a little bit longer because now the insurance company will pay to replace your floor. Still not going to pay for your heater, water heater, but they'll pay for resulting damage. Yes, ma'am.
I just have to say, on Friday, the hose that connects to my tank toilet. Fortunately, I was home within 15 minutes, but it was all flooded.
Yes,
So, you know, shit happens.
it does.
Was your insurance covered that?
Well, it was just that I managed to get home, so no, it wasn't that bad.
But would it have? Yes,
Yeah.
more than likely, depending on her policy, because coverages can be different, but more than likely, yes.
So it should have. Yeah.
So we've had decades of low premiums, and lots of insurance companies wanting to move into Idaho, lots of insurance companies working the marketplace all over the country. But insurance premiums were really, really low here and in some other places. And then things started to change, and we're in what we call now a hard market. So that means premiums are going up. Companies are they're non-renewing. They're being a little more selective in who they will write. They're kicking those bad swimmers out of the pool. And they're lowering their risk. They can't, and why? Because they can't make investments. Their investment money is not turning around like it used to. And it's just inflation. Go to this screen. Inflation is a big part of that. The fact that we've had so many losses. I was talking about the frequency and the size of losses. These numbers are kind of staggering. And that is $24.5 billion in underwriting losses. That means insurance companies lost $24.5 billion in that year to claims. At this point, that's 103 to 108%. Well, 8%, 3% to 8% over what they're bringing in. If your business was paying out 3 to 8% more than you were bringing in, how long would you be in business? How long could you afford to have rentals if all the damages you had to pay for, all the things you had to pay for, you had to put out 3 to 8% more than what you were bringing in for rents?
What was the previous 9 years?
Yeah.
It's that period of time. It started in
Surplus.
COVID. There was a surplus and then it kind of all went away. 25.4 billion, 2022. We don't have last year's numbers yet. Last I heard the estimated was 54 billion. So last year was even worse. So all the surplus that the companies did have is being eroded very, very quickly. And that's what's causing the problems. COVID probably started a lot of that. And do you remember, I don't know how many of you remember because we forget these things very quickly. How many of you got a rebate on your auto insurance during COVID because none of us were driving? You guys ever, now see, last time I asked that question, a lot of people remember
Oh,
that.
they forgot it.
Yes, because it wasn't huge money by any means, but it was, you know, 30, 40, 50, $60. Your insurance company step back.
I think we might.
Yeah, it's, again, I forgot, but I know I did it. I know I got it because I know the company I'm with did it. USAA, Geico, State Farm, Safeco Travelers, they all did it. They all sent something back. Well, when they did that, they were. This is where insurance companies have a tendency to be very girly, what I call very girly, because they're following the norm with everybody. Well, she's doing it, so I'm gonna do it. Well, Travelers did it, so we're gonna do it. Well, we can't let them do it and not do it ourselves. So everybody returned all this money. And guess what happened during COVID? There were more claims during COVID than there were the prior year.
Everybody was looking at their house like, oh, no.
Yep, there were more auto accidents because the people who were driving weren't doing a good job. It was easy street and they were all going 90 and running into each other. So it just didn't work out well. And insurance companies are very slow to react. So COVID didn't go well. 21, there's some significant losses. 22, there's even more losses. Hit 23, and the insurance companies have this knee-jerk reaction. We got to hurry and do something. I mean, you know, it took us 3 years to figure out that we needed to do something. And now we're so far in arrears that we've got to make this, I call it knee-jerk reaction, because we've got to recover. We can't keep going like this. There are companies here that have shut their doors to doing business. No homes, no autos insured, no businesses insured. They've completely shut their doors. Oregon Mutual, Kemper, I always forget the third one, Main Street America, 3 companies right in Idaho who shut their doors completely to do an insurance. Oregon Mutual still does commercial. So they were at such an underwriting loss that they couldn't do business anymore and just quit. That's how bad it is. And that's happening in other places. California and Florida, it's happening a lot. They have some really big struggles with insurance companies there. So climate change last year, let's say, yeah, one of the 2022 was the costliest year ever for climate change disasters, natural catastrophes. And those keep coming and they will keep coming. I mean, that's not my prediction. That's others. I don't have a crystal ball, so I haven't been able to figure that out, but everybody says it's just going to keep coming. Things aren't going to get better. They're going to get worse. Fires are going to get worse. All of our neighboring states, Colorado, Oregon, Washington, they've all had significant fires. We've had some small ones. We haven't had any major catastrophic losses in Idaho. But statistically, they say we're next. So that's part of the reason our premiums are going up as well. Make sense? Questions on that?
I almost feel sorry for them.
Oh, they'll recover. I assure you they will manage, just like any business would. They're just taking precautionary measures so they can stay afloat, so they can get back in the game. So they're not closing their doors. Stacy wanted to talk about the roof problem. What is the roof problem? How many of you have had a place that's had a roof problem or you couldn't get insurance because of one? What happened? I know your story. What's your
Well,
story?
I had a roof problem, but.
Not with insurance.
No insurance covered it.
Okay, why?
They said it was just Mother Nature's leak. Mother Nature, oh yeah. Mother Nature gets in insurance companies all the time.
So let me explain one thing. Your policy, and I know you've heard this already, you guys have already heard this. Your policy lays out what it's contractually obligated to pay. So if you were to read your policy and find out what that clause meant or demand from your adjuster that they explain that and show that to you in the policy, they have to do that. And you have every right to request that.
It was written in there, Mother Nature.
In your policy?
Yeah, had a tree fall on a roof once. Mother Nature.
But they still should have paid for resulting damage to your structure. Then you had a bad adjuster. Because that's a covered peril. If your tree falls on somebody else's property and it's Mother Nature, it's their policy that will take care of that damage. But if it falls on yours, your policy should take care of your damage. Huh.
But it doesn't.
Yeah.
But then you do it right.
It should, was it recent?
What was the reason?
What, no, was it recent?
Oh, no, it was a couple of years ago.
Okay.
I mean, it just fell on the roof and
And they said there's no coverage at all.
that's right.
I would love to see your policy. Because one of my favorite things in the world is digging into those contracts and looking to find out what they are really obligated to pay. And your adjuster should have been able to point that out to you. Unless you had a very restrictive policy that's normally covered. So I can't answer what might have happened. Other roof issues that anybody's run into. Yes.
See, the heavy wind came and blew off a casino. In terms of just all the couple years ago, and then it came down. Well, Mother Nature again.
Because what is the cost to replace a couple of shingles?
$300.
It's not your $10,000.
Right. So there's a good chance that yours might have been under the deductible. Yeah. I'm sorry.
That'd be a minimum, right? Cause they gotta buy a square and they're gonna have some run. It's probably more than.
Well, don't you have to, on the roof? We'll have to replace. So earlier days, we call it, they're having someone come out. Houses, the insurance day that doesn't replace, we pay the deductible insurance replace the whole roof. There's other.
Yeah, wouldn't the major driver for the increases be asset appreciation? It's really, I mean, well, you call it inflation, but I mean, we love to tout that we bought a house at 60 cents on the dollar and, 10 years later, we're selling for, 400 and something $1,000. I mean, just, you look at it and you just go, that's gotta affect the insurance and on a great scale.
Yep, you're right. And we didn't even touch on that. Supply chain issues and record inflation.
Yeah.
Now, we've seen increases 4 or 5 times more than that. I don't know, what have homes appreciated over the last couple of years?
A lot.
Yeah.
That's a great answer.
Yeah.
What's that?
Like plus 20 per year.
Yeah.
For like.
That's what I was thinking too. I just don't know exactly what that figure is, but it's huge.
And you take areas like Texas and Florida and the coastlines, right? They've been hit, triply hard because they've not only had more storms that come in or regular storms that come in, not necessarily more, just more damage that costs more.
Right. Yeah. And repair costs have been up.
Mhm.
I mean, building materials were up so much that it was just out of sight, crazy how much the cost to repair something was. And you can see that now. Anybody paid for a new roof recently? It is not cheap. I mean, the $4,000, $5,000 roofs of 4, 5, 10 years ago are long gone, long gone. It's very expensive to replace a roof, very expensive. And not just building costs, but the cost of labor. How much more we're paying for labor these days than we used to. So all that, you're right, all that gets factored in. Yep. And the roof issue about the cost of roofs and what's covered and what isn't covered. Once upon a time, you're right, the insurance companies would say, oh, you've got some damage to your roof, we'll replace the whole thing. Well, I'm not sure that was the smartest thing they could have done. Because if you've just got a few shingles blown off, do you have to replace your whole roof? Not usually. You just replace those shingles most of the time. But insurance companies will go out because they thought they were doing the right thing and making everybody happy, and they'd replace the whole roof. So they kind of set a precedent there, and they put out all this money to do that. Granted, then it was only $4,000 or $5,000, but they kept doing it over and over and over again. And at one point they had to pull the reins back. Say, we can't just replace everybody's roof every time they have 4 or 5 shingles blow off. So that was part of it too. Again, insurance companies being a little slow. They don't always catch on to these things very quickly. And yes, I'm in insurance and I can say these things all I want. Because it's true. We are the insurance company, and I'm a broker, so I work with the insurance companies, but they're just notoriously slow to react sometimes. And when they do, it's this current knee-jerk reaction.
Like the age of the roof, some
Definitely has something to do.
low, big chunk that of shingles, and then you have the age of the roof getting there. And then,
Right.
Then you say, okay, should I wait for the person he's sure to call me every couple of months or year. So I just go ahead and fix the fall.
Yeah, it's, the roofs, and we're gonna go more into roofs, because I know it's such a big issue. Personal issue.
Question.
Yes,
Is there value, or do you know the data, or could speak to the data about using a smaller, more local company that is not spreading the cost of risk? Like the Maui, the Texas, like all these major things that are happening to folks in Idaho that didn't have those things happen to them? Is there major differences there?
there can be. Oregon Mutual, the company I told you closed its doors last year, they were a small regional carrier. Their premiums were incredible. Matter of fact, we wrote more business with Oregon Mutual the last 3 years than we had written with anyone else, because their premiums were fantastic. They did not keep ahead of the curve. And that's why they are no longer writing personal insurance. So in some cases, though, Mutual, Venum, Claw, there are others. There are others that are doing a better job. They're taking bigger increases right now, just like everyone else. But they aren't as affected by what's going on in California because they don't write there.
So would you recommend those to a general Joe, Sally on the street?
If it fits the whole picture. Some of those companies are incredibly restrictive with what they'll do. So it depends. I think I say that 1,000 times a day about insurance companies. It depends on whether or not you fit them. It depends on whether or not they'll fit you. Everything depends, and they all do it differently. No two companies do everything the same. So it's just one of those things you have to look at.
Thank you.
You're welcome. More questions on that before we go on.
I had one on that note. I know that you get to work with many companies, but not all of the companies. And
Right.
so why don't all companies work with brokers and? Yeah,
And why don't brokers work with all companies?
or that,
Yes. There are, so can anybody tell me what the 3 different channels of buying insurance are,
directly to the insurance company itself, like through State Farm,
right?
through a broker.
Right?
I got the first 2. You got?
Think 1-800,
Oh,
Geico, USAA, you're calling an 800 number and getting,
Isn't that directly to them? That's different than direct?
it is different than direct, because Geico also does things through travelers. So it just depends. USAA is a direct writer, but the only way to access them is via an 800 number or online. So you can't just walk into a USAA office here and, so a little bit different, not substantially.
Got it.
So State Farm writes only business for State Farm. Allstate writes only business for Allstate. USAA, Geico, they are the company, their agents work for the company. Which is not a bad thing. I'm not bad mouthing that at all, because everybody has a fit and everybody has different needs. So it just depends on what your picture looks like, who's going to fit best for you. For me, as a broker, I am a snob. I've told you that before. We work with probably 15 to 20 different personal insurance companies and hundreds of others on the commercial and benefits and surety side. So a ton of different companies. We make that choice on who that is based on stability, claims paying, what they offer, and how well we can work with them, how well they can work with us, and what they have to offer. I mean, who cares if somebody can only offer, yellow car insurance? That's not going to do us any good. So we're pretty picky about who we write with, and insurance companies are pretty picky about who they choose to broker with as well. So that's why.
oh, okay.
Sometimes insurance companies will only work with really large agents. They don't want anything to do with the mom and pops. Some of the companies are different. They only want to work with the small agents. And so it depends on the carrier, but different relationships.
I
Yes.
noticed up there you said, have you had your roofs inspected
Yes.
annually? Do we report that to the insurance company?
Absolutely.
And who do we get
And
to?
not necessarily that you've had it inspected unless it's getting to the 20-year mark. But if you ever have a roof replaced, definitely let the company know, because they'll cancel you if your roof's not updated, and they don't even know if your roof's been updated. So they send a notice of non-renewal saying your roof's too old, we're not going to renew your policy. And then you call and they say, oh, well, we'll go ahead and stay on it because it's not sold after all. Do it in advance because it could also lower your premium. So, yeah, yes.
I know in real estate, the broker and then there's the agent. You're referring to yourself as a broker. Is there an agent under you that we would contact for claim stuff?
No, so I am an agent. I work for Marsh McLennan, who is the broker.
Okay.
So in the good old days, we called that an agency. Now everybody's a broker. What that means is you just have a relationship with a lot of different companies. And you work for the people as opposed to working for the insurance company. Again, going back several years, agents were considered, they worked for the insurance company, but that's changed. It's not, I don't work for Safeco. I work for you, but Safeco is one of the companies I represent. Safeco is one of the companies I can access if they happen to fit the mold. You
Are
had a
able
question.
to negotiate labor and or materials in your premiums? No, it's just choose materials versus, and labor separately. I'm just curious.
I'm not sure I understand your question.
Well, so a lot of times we pay, you know, you, in your premium, you sit there and you go, well, okay, everything's covered on the roof. And they send out a guy and fixes everything and you pay that one bill. Are you able to negotiate the labor on one, you know, maybe just cover just materials or just labor?
That would vary by company too.
Was it?
They do a lot of negotiation and they'll work with specific contractors because they have an agreement with specific contractors or specific remediation companies to do work. So they'll get negotiated premiums or, excuse me, rates from those particular companies. And I'm sure more of that goes on during the claim process as well. Yeah. It's on the screen, so I kind of shot myself in the foot, but how many of you knew that just a 3-tab shingle roof, if you were lucky, would last 20 years? If you were lucky, it'll last 20 years. Yeah. Architectural, if you're lucky, 25 to 30 years. When do people replace their roofs? Yeah, when it starts leaking. Yeah, at year 25 and year 35. Because again, especially now, because they're so expensive. So consequently, many insurance companies have said, okay, you've got a standard 3-tab roof. If it's 20 years or older, we will not write your insurance at all right now. I've got some insurance companies who are saying if it's 15 years older, we won't write a policy for you. I have an insurance company who's saying if your home is over 20 years, we won't write a policy for you. Which I find very, I know where you live. I know your home's over 20 years old. My home is over 20 years old. My kitchen's brand new. My bathrooms have been updated. I'm getting ready to redo my plumbing. I mean, you know, a lot of people take a lot of pride in their older homes and do a lot of work on them. And now you're telling me I'm not good enough for you to write insurance for me? That's their prerogative. Fortunately, there's a lot of other companies that you get to go to and find a company who will write it. But that's how hard the market is. That's how difficult insurance companies are making things and the approach that they're taking to get those bad swimmers out of the pool. Make sense? Yeah.
Money in the good years.
Yep, and it all went into that pool and all those people who had all those claims, the $24 billion in claims, that's where your money went.
But I think that there's also people that have older homes that are fastidious about maintenance that,
Me,
yeah.
absolutely. And again, that's why I say we're fortunate that there are a lot of other companies that you can go to and find equal or better coverage. You don't have to just go to that one company. So there are a lot of options. So know that when you run into that, the best thing you can do is just check elsewhere. When you get non-renewed, when there's an issue, what do? We move it to another company. We find someone else to write it. Because they're not the only ones. That's the best part. You have choice. Other things to look for that the insurance companies are looking for is updated HVAC systems. Those aren't huge, but they will ask, how old is the system? If you've got a 50-year-old home and you've never updated the HVAC system, there could be a problem. Plumbing is big because back in the early 80s, mid 70s, early 80s, up through early nineties, mid nineties, they were using polybutylene plumbing. Anybody have any of that in their home?
What?
Polybutylene plumbing?
What color is it?
It's gray, I believe.
There's gray or there's blue, and there's copper fittings, or there's the other kind of fittings. And if you get an inspection, you get a whole long section in your report on the polybutylene, yeah.
That's why I
And
say,
then
I
Renae tells you to get a water alarm. They have
Yes.
really good water alarms, but we don't have polybutylene piping, but we just sell houses sometimes have it. We need to figure out if it's still worth it.
actually do have polybutylene in mine, and the problem with that plumbing is that it disintegrates. At the joints, at the fittings, I mean, it will disintegrate, and of course, water loss after water loss. Well, we've had 5. Because of what I do, I've paid for our own water losses, because I knew if I turned in 5 water losses, guess how fast they'd cancel me. I don't get any special privileges either, much to my dismay. But there are water alarm systems that you can buy and put in. If you've got a cabin that sits somewhere for a while and you don't know what's going on there all the time. Alarm systems like Flow, there are actually several of them. I put Flow in mine. It was a $1,000 installation of an alarm on the plumbing that comes into the home. It's right under the sink in my house, downstairs. They put it right there. It monitors your water habits. It watches what's going on. And if it sees something out of the ordinary, it will ping you by cell phone, texting. It'll call you ultimately if you don't respond to those. And then if you don't respond, it'll just shut your water off. So they're really, really good. And having it do that after just 15 to 20 minutes of what could be a slow leak or massive leak, you don't know at the time. I'd much rather have 15 minutes of that than the entire 4-day weekend that I just left for, because the damage is significantly more. So know that those are options that you can put in, and companies are starting to add credits for those too. But that's a big one. Plumbing is huge, and electrical updates. Older homes, knob and tube wiring, nobody wants that anymore. For a while, we had companies that would still do that. Very few will do it now. Fuses, same thing. A lot of companies will not write a home with fuses in it anymore. Yes, it's getting really difficult. So if you've had updates to homes, rental properties, investment properties, whatever you have, if you do any of this, make sure you let your agent know, because it could change your premium. It could change the underwriting look of your whole policy. So make sure you do those things. Questions on anything that we just went over?
I'd just say that, we've had quite a few claims. We've made a few claims, and I would say that our experience overall, just in fairness to you, has been great.
Good.
Right? I mean, they paid, and sometimes they even, exceeded our thoughts and requirements, you know? But we paid them well too, but I mean, it's just,
Right.
it's been, you know, I haven't felt like I've ever been taken.
Oh, I keep on getting a letter from insurance companies that because the house is appreciated so much. We should go rewrite the policy so they can give you a fair value when something happens. I understand that part of the issue that if they reevaluate the cost of stuff too.
Right.
What's the pros and the cons, what's right in this situation?
If your house burns to the ground and in the value of it's 800,000, but you've got it insured for 500,000. How happy are you then? That's the biggest issue, is that it's by contract, and your policies probably all state this, that it's your job, along with your agent, to make sure you have enough coverage on your policy. If you do a remodel, if you do an addition, if you do any updates, you let the company know. They're supposed to put that in their record, so they have it. And you have to make sure you have enough coverage. And if you don't, there's penalty clauses that can go along with that. Other than the penalty that I should have 800,000, but I only had 500,000. That came about mid-80s when the Oakland fires happened. Because companies at that point offered guaranteed replacement cost. So if your home was insured for 500,000, but it cost you 1.2 to rebuild it, because you had guaranteed replacement cost, that's what the insurance company had to do. So when all those homes, the complete neighborhoods burned away in Oakland, that were insured for, I mean, just grossly underinsured. Most of them for less than a quarter of what they actually needed to have. Because at that time, insurance companies nor agents paid attention to that, nor did the public. I mean, we insured it. We thought we were doing the right thing. You left it at that. They didn't have the money to pay those losses and they had no choice. They had to rebuild those homes because replacement cost was guaranteed. Replacement guarantee actually went away. There's maybe half a dozen companies that still offer guaranteed home replacement because of that.
We're thinking about doing like a remodel for outdoor living area, so we should probably have that be appraised afterwards.
Yes. Yep, at least let them know and ask them to run what's called a replacement cost estimator to make sure you have enough coverage.
Do they share that with the county?
No,
Good question.
it is a good question because people think that the information flow goes back and forth and it doesn't. We don't report any of that information. Yes, don't tell anyone. I have a small addition on my house too. It's on my insurance, but it's not. I understand where you're coming from.
The companies that do guaranteed replacement, do they require you to, get it appraised every so many years?
Usually they'll appraise it when the policy is first written. They'll come out and say, okay, the value of your home is 500,000. And please know, I'm just throwing that number out. They'll say it's 500,000 and then boom, they guarantee to rebuild like, kind and quality up to 500,000. And if it's more than that, because there's a guarantee, if it's $1 million, they're on the hook for that. You complied with what they asked for. They did the appraisal, but it is, again, in the contract, it says, if you make additions or you know there's been a substantial change, alert your agent so you can have your coverage increased.
Are they required to report any of that to the government?
The insurance company?
Yeah,
No.
so if you increase my insurance rate, you're not telling anti-California to tell you that it's costing me, that your property value is now let's say $1.2 million to replace, and I just want to.
No, that's just between the company, the agent, and you. That doesn't go anywhere else. Well, your lender, if you had one, they have that information, but that's it. It doesn't get reported to anyone else. Did I answer your question?
Did, agents used to drive by and eyeball a property every?
Yeah, we call that a drive-by shooting.
Yeah.
And they're doing it even more now.
Oh, they do.
And it's not necessarily the agents or the brokers that are doing that. It's the insurance companies are pulling in third parties who are driving by and doing the shootings. They go by and they're looking for things like business signs and do you have a dog in the front yard? Is the maintenance good? Does the roof have shingles curling? They do those. A lot of companies are doing that a lot. Yeah. Other questions? Did I answer your questions?
I think so. How many people either get a call from their insurance broker or agent or call them each year to make sure your coverage is still adequate?
Never. Well, that's another question. If you have really real trust in your agent, instead of changing companies every few years, what's your feeling on that?
Well, there's nothing wrong with having a good relationship with your agent. That's the best thing, but that should be a working relationship too. Reaching out to them and asking them to review your insurance to make sure you have enough coverage. Is everything the way it should be? What has changed in the last couple of years that I might need to add to my policy or get rid of that I don't even need? Because sometimes insurance companies will add all these cool features to your policy and you all read your renewals when they come in, right?
Yeah.
Right?
Oh,
It's
sure.
the best reading ever if you need to get some sleep. Yeah, they throw those things in there and it may be something that you could just throw right back out and save some money. So I would definitely encourage, good working relationships are rare. And if you have one and you want to keep that, reach out to your agent and have them do those reviews. Because I guarantee you right now, the insurance world is such a state of flux, and it has been since last year, that we aren't necessarily reaching out as much as we used to. In my own office, because things are so frantic, we're just not getting it done because we're trying to fix all the other things that are going on. So it would be and they would probably welcome your call.
Do you think that, I mean, just tell from your gut experiences, are you getting someone who's really qualified and you can just make the phone call? I mean, I've gone to the bank and I've dealt with people across the counter and they call them bankers and I'm like, you don't even know how to use a calculator for goodness sakes, and you're telling me you're a banker. And, you're letting me walk out the door because without a finished account, and, just a lot of things I see. So are we gonna get that experience when I'm talking to an insurance guy, or is it just gonna be the guy that we've been doing business with all these years?
I think that varies again by company, but you should, in my opinion, a personal review is going to Tin Roof Tacos and meeting for lunch and going through different things, or it's you coming into the office and sitting down and going through what's changed in your world, what haven't we taken care of? Well, what haven't we talked about in the last 5 years? Because people get busy. I mean, really, is insurance foremost on your mind every day? It's really not. I mean, it's not on most people, unless you have a loss. But sit down every 3-4 years at the outset and make sure that things are updated. I would say every 2 years if you can.
You hear what the neighbors talk is.
Nobody really raised their hands about checking in with their agent
Yes.
each year, but our rents are going up and we probably all have loss of rents on our rental policies. And so that also, every time you raise your rents with your insurance agent and broker, that also raises the premium. Are there areas like that where we should go ahead and let it get lower? It's my understanding, keeping your coverage up to date to match the value of your home is important because it's making sure how much you're gonna get, if you're gonna get a full replacement cost, right? And isn't there something like if you're within 80% of the number of the calculator, that even if you're 20% shy,
Depends on the company.
you get the full amount?
Right.
And so but then what about your loss of rents? Loss of rents, if we're low on our loss of rents, we just get a little bit less money.
Right. So it's usually,
Does it ever make sense to let that go low just to pay less money?
usually loss of rents doesn't cost much.
Okay,
It's a very insignificant part of your overall premium.
okay.
And there are some companies who give you automatically 10% or 20% of whatever the value on the structure is. There are other companies that give you what's called ALS, actual loss sustained, meaning no matter what happens, you've got coverage within reason to repair or replace the building if something happens and you're out of rent for a while. So it varies by company.
Okay.
Stacy, did you say that when your rents go up, your premiums go up?
If you report your rents to your broker, then your rental coverage goes up to whatever the actual thing
Well,
is.
You say, yeah, I don't do that, but do most people do that?
Most people don't do it.
No,
I
I
would-
don't do it.
I would say most people don't. The biggest thing is to look and see how much coverage you have and make sure that that's enough for you, whether, like I said, some of them it's actual loss sustained, so there's no limit on the dollar amount. Others, could be 15,000. And how long will that last if something happens and you're out of rent for a year while the house is being rebuilt, or the apartments or the triplex? It could be substantial. So I would pay attention to what those numbers are, because the premium again associated with that is minimal compared to what the coverage or the premium is on the structure. Other questions?
Should we do the recap, everyone?
Sure.
All right, well, first off, thank you, Renee.
Hopefully
Okay,
that gives you a little bit of understanding of why things are a little crazy and ways that you can help mitigate some of that.
and Renee is available for folks who have deeper questions about their own properties. But Renae Goodwin of Marsh McLennan Agency, thank you for coming to AVID Investors. I'm StacyA McBain with Swope Investment Property, and AVID Investors, thank you for being here. So tonight, we talked all about the insurance industry, wondering if it's gone bonkers. And in some ways, Renee supported that question.
Yes, it has.
But she reassured us that it's regulated. And that Idaho actually has lower insurance costs than other states. And that we're just in a hard market with no end in sight. Due to inflation, staggering losses, climate change, and fires getting worse in Idaho. Just wait. So some of the things that we can do to protect ourselves is take advantage of the right that we have to request an explanation of our coverage from our agent or broker. And that could include checking in on whether we have our loss of rents, and it should include covered, and it should include checking in on the overall amount of our structure and the coverage that we have for it. Because if we haven't checked in on it in 5 years, it could have doubled. The value of everything that we own could have doubled. And that would very quickly leave us underinsured. And with the insurance industry going bananas, even the best of brokers may not get to call us as regularly as they would have if they're not literally putting out fires with their time. So that puts the onus on us to make sure that we're insured correctly. And some other things that she recommended that we do are annual roof inspections and let our insurance broker know when we do replace the roof and when we do major upgrades, so they don't kick us to the curb. So they know that we're keeping up with our property and keeping track of it. She recommended the flow alarm on or water alarms for plumbing, since those losses can be huge. And also relate her own personal story about how calling and filing claims and losses, it's gonna raise your, oh, she didn't say it, but it'll raise your rates, it'll impact you. So we need to be careful about what we claim and helping the insurance companies prevent claims with things like alarms. And I think that's about it. In an agent, as a real estate agent, I've seen sellers having trouble selling their house with the roof in the as-is condition when it gets older. And Renae addressed how we're seeing companies put the smack down on older roofs and do more drive-bys of our property and take note. So hopefully you know who to call if you get a notice that you're being non-renewed. And if you don't, make sure you have somebody you can call, and you may need to, in that event, change companies. Thank you, Renae.
Thank you.
Anything we missed here in the recap?
I think you got it.
Thank you so
Don't
much.
forget to check your deductibles. If you're getting those big premium swings, check your deductible, raise those up to whatever you can stand. Share the risk with your company. Save the money.